Hello, and welcome to our Market Alert video for today, which is January 17, 2025. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And we have a lot to talk about. We got the inflation numbers coming in, and they came in basically where we thought they would. In June of last year, we said that inflation would trend up towards 3% by the end of the year. Came in at 2.9%. So dang it, we missed it by 0.1%. I hate it when that happens. So I want to get into all of that with you here in just a second, but I got to share something with you. My grandson, who's 3 years old, had his birthday last year, and he got the coolest present, I think, that he got this toy car, and you know, it is so well made. It's such high quality. And I love a product that is well made. You can tell it's the quality. I love to interact with a high quality product. It makes me happy to see that. So anyway, this car, you can push it, and it'll go 50 yards straight as an arrow on a flat surface, without veering off to the left or to the right, smooth like a sled on snow. Very, very cool. And so what happened was that I wanted to play with it with my grandson. So I'd say, go stand way over there and I'll push it out to you, and then you can catch it. And we played like that. Well, you're not going to like me for this, but I actually for a moment contemplated stealing that toy from him. And my daughter was like, "Daddy, step away from the vehicle. This is his, not yours." And I said, "Yeah, but he's a 3-year-old. He has no attention span." "No, you can't have it." So for Christmas, guess what I got? So I want to show you one of them. Now, this isn't exactly the one that he had. His was kind of a Corvette-looking one. But this is what it looks like. And it's made by a company called Play Forever. I get no commission. And interestingly, they're expensive. They sell for $55 each. But people collect these. Do you know how much a collector's item of this costs? I looked it up. $7,800. Oh, my gosh. So anyway, I got 3 of the $55 versions for Christmas, all different, which is cool. So there you are. So let's talk about inflation, interest rates, the stock market, the bond market, things that are more pertinent to this video. So as I said, the way that they calculate inflation is when they say inflation is going up or it's going down, compared to what? Well, they're comparing it to a year ago. So the inflation number that we just got was for December of 24, and therefore they compared December of 24 to December of 23. And if the rate of change was lower, then inflation went down. If the rate of change was higher, then inflation went up versus that. So going forward, they're going to do the same thing. So in February, we're going to get January's inflation data. There's always that month gap. And in March, we'll get February, and in April, we'll get March. So the next 3 months are going to be compared to the first 3 months of last year. And it's going to be an easy beat because inflation was a little high in the first 3 months of 2024. So likely is that it'll be lower this year when they announce those numbers. That being the case, we anticipate that inflation will trend back down. And in May, in April, when they announce March's numbers, we think inflation will drop back down to about 2.6% from the almost 3 where it is now. So what does that mean? Well, as you may have noticed, when we got the jobs numbers, the market went way down. Why? Because, oh my gosh, inflation's going back up again. The Federal Reserve is going to have to raise interest rate. No, don't do that. And then we get the inflation number here this week, and oh yeah, well, wait a second, the Fed may actually be lowering interest rates now. So the market goes straight up after that. So it seems to be that the stock market is tethered to inflation and the outlook for what the Fed's going to do with interest rates. And so we think that if over the next 3 months the inflation rate goes down every month, that will be very positive for the market. For the stock market, for the dynamic that I just described. The other thing that it'll do, most likely, is the Fed will start talking about lowering interest rates some more, and the bond market should like that a lot as well. So from both of those perspectives, it looks really good. Now, the wild card, of course, is the new president we're about to have, and that's President Trump. try to predict that man. He is so unpredictable. It's very difficult to factor in the Trump factor into our forecast of what's going to happen. However, having said that, his policies tend to be business friendly, lower regulations, lower taxes, those kind of things. And that being the case, we think that that'll also be positive for both the stock and the bond markets. So overall, the outlook looks pretty good. Now, as we've always said, it is very, very important. We work with people who are retiring soon. And so for that demographic, it is, in our view, extremely important to always have a strategy to protect yourself from the downside. Big, bad bear markets come out of the blue. The things that cause the market to go down 30, 40, 50% are things that hit the market blindside. And those things we think, you should have a strategy to address that, to protect yourself from those kind of things. And in our firm, we do. We have what we call our invest and protect strategy. And it told us to sell in November of 2007, before the stock market crash of 2008, told us to sell literally the day before the pandemic was announced. And that was a big bad bear, although it was short-lived. And so we were out for most of the downside on that. We believe that growth is important, but protection of principal is even more important. And for the people that we work with who are about to retire within 5 years or who are already retired, that's a very important dynamic that we want to address. So if you're in that camp, then go to our website. It's rpoa.com. Learn more about what we do and how we do it. What we say is we have a goal of creating as many SCWPS as we possibly can. And SCWPS is the acronym for Second Childhood Without Parental Supervision. So when one of our clients retires, we call him a SCWPR, and we tell him to go play, have fun, enjoy. Let us worry about all this boring financial stuff for you. So our goal is to make you a SCWPR, and you can only be that if you're our client. So thank you for watching this video. Hope it finds you healthy, wealthy, and wise. Share it with as many people as you'd like. We'd love to help as many people as we can. So we'll talk soon.
Retirement Planners of America.